All right, so NFP came last week Friday. We had the much awaited NFP. The data came out not as expected. There was some little conflict. Let me not use the word where, there was a little conflict in the data. There was a little conflict in the data, but nonetheless, the outcome eventually, the person that anchored it, I remember telling us to hold on, and wait for further recommendations. And for those who waited over time, the market still was able to go in the line of the expectation. I'm trying to get the Friday NFP. Okay, if I can't find it, we need to move on. This Okay, let me go back to Friday. Yesterday, Sunday, Friday 8. Okay, yeah, I think I found it. All right, so on Friday, the data was released for the NFP. The average hourly earnings came out good for the dollar. That, was a positive one. The unemployment rate came out good for the dollar. However, the negative one was the non-farm employment change. For the non-farm employment change, the data came out bad for the dollar. That means that the number of expected, job uh employment was not completely utilized. Maybe people lost job or something like that. So it was a negative data. So that's why there was a spike. For those who took the trade, you discovered that there was a buying and selling simultaneously. Now, that's why the strategy we used for the trade, I said it earlier that our strategy covers all kind of scenarios you may come across. If it was a good data all through, green, green, green all through, we'll have seen a massive bullish movement in the market. But because, there was a buying and selling, it was like a zigzag kind of movement. And then the trading strategy was able to capture it, but it required a measure of patience. That's why for those who were able to hold on much later in the day, it's clear that the trade was able to go as expected for the USDCHF and both the GBP USD. So we look out for subsequent data when we have a scenario whether everything is good for the dollar, in which all the currency required, which it's going to be a buy, or if it's bad for that currency, maybe a red, 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 then that will be a sell. All right, let's look at what we have for this week. For this week, we have quite a lot of interesting uh, fundamental activity ahead. I think part of it we're going to be having the CPI this week, which is equally going to be a tradable live event. Okay, I think my system is kind of hanging. There should be more data down there, but from what I can see here, today, Monday, there is no tradable fundamental event today. All right, there's no tradable fundamental event today, Monday. Tomorrow, there will be JPY bank holiday, so you need to be careful with the JPY pairs. But then later tomorrow, there will also be the Bank of England Governor Bailey speech by 1:15 p.m. and Fed Chair Powell will give a testimony by 4 p.m. So tomorrow we need to be careful of the JPY pairs, GBP pairs, and the USD. Now these are speeches and holidays, so we need to be very, very cautious with trading tomorrow because there'll be a lot of irregular movements in the market due to the fact that these events are not even tradable to start with. So we need to be cautious tomorrow. And on Wednesday by 2:30 p.m. there'll be core CPI, CPI and CPI monthly and CPI yearly. So 2:30 p.m. on Wednesday is another time we're having a trading event. Live trading event, and these are the two events we trade at PU Prime. We trade the NFP and we trade the CPI, both of them for the United States. Those are the only two ones we trade. The only currency that we trade. NFP, that's the employment change and unemployment rate in the US, and CPI, which is the consumer price index. So get ready again. If you missed the opportunity to trade NFP on last Friday, then CPI is another time to trade. So join us on Wednesday to trade the CPI live. Other events on Wednesday will be the Fed Chair Powell testimony again and crude oil inventories by 4:30 p.m. on Wednesday. That will be the other fundamental event for Wednesday. All right, I'll flip over now to my charts. Let's look at what we have technically for this week. Okay, so now the NFP has come and is gone, so the dollar should start, moving in its direction, the expected direction. I'm trying to find my dollar index. When you want to analyze the dollar, it's always good to start from the dollar index. All right, so this is the dollar index. The news already had been released. I mean, we are out of the NFP zone. We should look at what is obtainable next. Now, this is the the USDX, that's the dollar index on the daily time frame. Let's go to the weekly. Okay. On the daily time frame, well, one of the things will happen from what I'm seeing. I think I have a clearer picture even on the USD CHF compared to what I'm seeing on the dollar index. The dollar index is not really giving me the what I really expect to see. Now, let me look at the USD CHF. This is USD CHF. The analysis on this instrument still remains the same after like the last 3 weeks to a month we've been on it. We have price hit this resistance zone on the weekly time frame, and there's also a valid support zone on the same weekly time frame. So more or less on the weekly time frame, the dollar is in a range. But when you're in when the currency is on the range on the weekly time frame, that's a very big one. There will still be a lot of tradable opportunities. We're not looking at the range within 1 hour or lower time frame like that. So the range is a perfect one, and we have a trend line up there and a trend line again at the back, giving us a rising wedge pattern. So ultimately, I still maintain, I don't know when it's going to happen, but I believe the dollar will still break out downwards. Is it this week? Well, let's watch and see. But from what I'm seeing at the moment, I'm seeing that this price is trying to form a shoulder, a head, and possibly a second shoulder. Price may go up. It's a may go up to retest that resistance before we experience that massive breakout. Now, you please take note of my choice of words. I said may. So it's possible price may still push up from today to this resistance zone. It's a 50-50. If it goes up to that place, all well and good. And if it decides to reverse from here, well, we need to follow the market to where it's going. But from my analysis, there's a possibility we may have price push up to that resistance, then break out, from there downwards, for a massive long-term bearish movement. So I would say that for the dollar, we still have a short-term bullish movement and possibly a longer term bearish movement. And if it works like that, this zone here remains the neckline zone that price will need to break for us to have that long term massive bullish movement. And another reason why price may go up today is this: we have a tweezer bottom. This is a tweezer bottom here. Upon price touching the trend line, it formed the tweezer bottom, which is a reversal candlestick pattern. So that might still push price. It does what push price on Friday, and we might still see a further push of price, to that resistance zone up there before we have a final bearish breakout. So, like I said, I maintain a short-term bullish movement on the dollar and a longer-term bearish movement on the dollar. And the same thing I'm seeing also on the USD The USD just a second. Okay, sorry, I mean the USD card. Pardon me. I'm talking about the USD, the USD card. For the USD card, you can clearly see that price, also is ranging around the support zone. There is a resistance that we can see there right from let's check from the monthly time frame, and that big candle, bearish candle, which started from last week, which spanned into the month of February, and currently price may range. This is also trying to form a kind of a shoulder, a head, possibly a second shoulder, then a massive bearish breakout. So either ways we want to look at it, we have a short-term bullish movement on the dollar and a longer term bearish movement on the dollar. So in the course of this week, price, you can see that we had a range. All these are a kind of a range. We might have the same range replicated here before we eventually have a bearish breakout. So the same thing we are seeing on the USD CHF is what you can see on the USD card. We have a short-term bullish and a longer-term bearish movement on the dollar. That's the general outlook of the dollar for this week. Now, there are other pairs I'll show us now. I don't have much set up on a lot of the other pairs, but the ones that to a large extent are found a tradable setup, I will just go straight to them so that we look at potential opportunities, on those specific instruments. Um, I'll take a look at the JPY pairs were completely oversold last week, completely. But then I'll put my emphasis on the Euro JPY, the AUD JPY. Those two should give us very good setup for this week. All right, so this is the Euro JPY. The Euro JPY closed last week on a support zone. You can see we have a support level here, a second one. This came very, very close, but then the main candle, we can still push this up a little to cover up for this gap here. All right, so we have price hitting this support zone multiple times last week. So we expect a breakout into the bullish direction this week. So this on the daily, we can still flip down to a smaller time frame so that we can look at possible entry. This is 4 hour and nothing potentially is really happening on the 4 hour. So we can flip down to the 1 hour time frame. Now on the 1 hour time frame, I can have my trend line right here and have a second one below. All right. So we'll be waiting for a breakout upwards, possibly in the course of today. This is an intraday setup, but then, like I always say, our confirmation should be our RSI must clearly above 50 for us to look for a bullish, breakout on this instrument. So I'm bullish on the Euro JPY for today. This is a daily setup. So I'm bullish on the Euro JPY today. And the same thing, I'm bullish on the AUD JPY. If we find price also closed on a support level last week for the AUD JPY. All right, so we can see the tip of the candle touching the previous low there. So we have a support zone there on the daily time frame for the AUD JPY. The same thing, we flip down from daily to 4 hour to 1 hour, and we can clearly see that price is about to break out. It should be this way. All right, so we're about to experience a bullish breakout on the AUD JPY on the 1 hour. Now, price is already testing the trend line. Is already testing the trend line. I need to zoom out so that you can see it clearly. Now, I can see the last candle is actually like a rejection candle. So it's possible price may, retrace a little before we see the actual breakout. So to trade this, I will suggest you wait for a clear breakout, this rejection candle can form, or is forming rather, a minor resistance zone. So you need to see a clear breakout of price, as in a new candle must break out above that resistance zone before you trigger a buy on the AUD JPY. So we are bullish on both the Euro JPY and the AUD JPY for today. It's an intraday setup, so I'm emphasizing that so we can put our eyes on it in the course of today. And those two setup are what we can put our eyes on for intraday setup. There are two other setup I want to show us, or let me say one. Let me focus on one, and that's the New Zealand card. The New Zealand card will be having more of a swing setup on that particular instrument. All right, so this is the New Zealand card on the 4 hour time frame. Let's start from the daily. Now, from the daily time frame, if you look at this instrument, we had a downtrend recently. Price was trending down. You can see the trend line, and at this point here, we ended up having a kind of a resistance from a previous support turned resistance here. Then last week Sunday, there was this massive bearish candle, which led to the beginning of a bearish movement on this instrument. It's not looking too clear now, but if you flip down to the 4 hour time frame, this is what I can see. I'm seeing the formation of a shoulder, a head, a second shoulder, and we should see a bearish movement. Though currently looks like it's bullish, but that's, you can see there's already a minor support here, and if price is unable to break that, we'll see a movement downwards. So I'm bearish biased on the New Zealand card. However, I'll only be looking for opportunity to trigger a sell on this instrument if price breaks out below the support zone. So if price breaks out below that support zone, then we'll see that price will drop down into the major support zone on the 4 hour, and that can generate, on the average, it can generate about some 50 to 80 pips in movement. So I'm bearish on the New Zealand card. So three instruments I've analyzed for us today: the Euro JPY that we're looking for opportunity to buy, the AUD JPY, which also is bullish on both of them on 1 hour, and the New Zealand card, which is bearish on the 4 hour time frame. All right, so that'll be all from my end this morning. If you have a question, you have a request, let me just know as we move on in this analysis. So for those who are just joining us, don't forget we're going to have a live trading session for CPI this Wednesday. Wednesday this week. That's 2 days from now. So if you miss the NFP, the CPI is another opportunity to trade with us live and make money live. All right, Precious Okere is asking me to check GBP JPY, GBP USD, BTC, that's Udeme, and Clement AUD USD. All right, so let's look at the GBP JPY and the GBP USD. Now, like I said, the GBP pairs, most of the time, they all move in the same direction. So if after a massive dump of a previous week, then the next week what happens is that they go bullish. That is the general expectation. So, but then let's look specifically at the GBP JPY. All right, so this is the GBP JPY. We'll start. What we do is called top-down analysis. We analyze from the top down to the bottom, from the bigger time frame down to the lower time frame. Now, on the daily time frame, this is what I can see. I can see a price touching a trend line that is moving in a bullish direction with the higher lows touching the trend line here, second time, and the Friday candle touching it a third time. So technically, the overall trend is a bullish trend. So we're expected to see price go in the bullish direction. So we follow the trend. The trend is always your friend. So can we, this is 4 hour. We're not seeing anything special on 4 hour. Then we move down to 1 hour time frame. And on 1 hour time frame, what do? We draw a trend line. We'll be waiting for a breakout. We'll do a trend line bounce on the bigger time frame, and we'll look for a trend line break on the lower time frame. That's how we do this. So on the 1 hour, this is what we can see. We can see that we have a falling wedge pattern, and we'll be waiting for price to break out up. Though just exactly as what I mentioned on the, I think the Euro JPY, there's a possibility that price may sell first. Because you can see the candle, that last candle here is a rejection candle. That might lead to some bearish movement before we see the major bullish breakout. So we're going to put a zone there where we wait for a breakout above this minor resistance zone. So once a new candle opens above that resistance zone, you can trigger a buy, and always confirm with your RSI that it's clearly above 50, since we're looking for opportunity to buy. So I'm bullish on the GBP JPY. And for the GBP USD, price hit a resistance, a minor resistance zone here last week. So that led to some bearish movement. And currently, we're seeing what looks a lot like a double top pattern. And price is testing the neckline as we speak. Now, from our analysis of the USD CHF, we see that there's a potential for USD CHF possibly to go higher. If that happens, then GBP USD might break this neckline of the double top and might go bearish. So we might see some bearish movement. Ultimately, it's still going to be bullish, but we'll see some bearish movement before the bull takes over. So it's the opposite of what we analyzed on the USD CHF, where we said price may go up before we have a final bearish breakout. So this one, price may go down a little before we have the final bullish breakout. So my position for now is this: we are at a critical point. This is the neckline of a double top pattern which formed here. And if price is testing that neckline, if price breaks it, then we'll see a bearish movement on the GBP USD. Let me go to the line chart to confirm. Yeah, the line chart is giving me the same thing. I use it for confirmation. When you can see there is one fake out over there, so this is a line chart. It's still giving me the letter M for the double top. So price is testing the neckline at the moment. If it breaks it, we'll see an opportunity to sell. So I have a bearish outlook rather on the GBP USD for now, pending any other change in the market. Next is the AUD US. Okay, BTC. Okay, Udo BTC, Amos BTC. So let's attend to BTC. Then we'll come back to AUD USD and gold. All right, so this is the BTC USD on the daily time frame. You need to trade BTC with a lot of caution at this time because there seems to be a lot of instability. The real picture I'm seeing here is I've analyzed this multiple times to us. I'm seeing a double top pattern which may break down. That is if it does. But on the other hand, sometime recently we had a rejection candle that touched the trend line, the neckline rather, and that is what is responsible for some movement we are seeing at the moment. So it's like it's neither buying or selling. You can see this rejection candle touched the neckline region and there was a bounce. So today's candle is looking bullish. Does it mean you should buy? Not exactly. I've always said it. A bullish candle does not mean buy. A bearish candle does not exactly mean sell. You need to find out what really is happening so that you can know which direction the market is going. Yeah, I remember also giving us the outlook of an inverse head and shoulder last week. I mentioned this. Okay, so if this works out on 4 hour, the inverse head and shoulder pattern, then we may be having a bullish breakout in view where this region here becomes a falling wedge. And this falling wedge pattern, we can take it down to 1 hour time frame. So it's a valid falling wedge both on the 4 hour and on the 1 hour. Now the last candle is a rejection candle, so I will say trade with caution. We may see a bearish movement first before we see the bullish breakout. So I will say that I'm bullish on the BTC USD, but please take note, you need a new candle above this rejection candle before you look for opportunity to buy. So we need to mark that as a resistance zone. This whole zone here is a resistance zone. So we need to wait. There will be a retest, a breakout, but ultimately a new candle above this zone before you can buy. So we're bullish on BTC USD. So we look at AED USD and gold. AED USD will also respond to what is happening to the dollar. It's the dollar movement that will determine what goes on with the AED USD. Currently, we're having a lot of, you know, these fake out candles. You need to trade this with a lot of caution. If you are not in the trade on AED USD, I would advise you just stay out for now. It's not giving a clear setup. If you are not on the trade, please just stay out of it. So finally, I'll look at gold. All right, so this is gold. Gold is just moving massively higher. Will it continue going higher? Well, the week will decide. But if the dollar is going bullish, then there's a possibility of gold reversing to a bearish direction. Currently, we're seeing a rising wedge pattern form on the weekly time frame, and price on the weekly time frame is testing that trend line. You can see we have this higher high set up there, and price is just testing the higher high, that it is touching it. When we use the word testing, it means it's touching it with that area acting as a resistance, a resistance zone. And a resistance zone may be looking for opportunity to sell. But then that's just on a general note. We need to still come down to a lower time frame. That's why it's called top-down analysis. So we'll check on the daily. This is what we're seeing on the daily. The candle for last week Friday closed as a rejection candle after price has tested the same trend line zone for some days. So a rejection candle could signify a potential reversal in the market. So we'll go to the 4 hour. We are not seeing anything clear on 4 hour. On 1 hour time frame, is there anything to see? Well, currently I can't really say, but this is what I'm seeing. We have a trend line there. We have a second one here, which is kind of forming a rising wedge pattern. So with the rising wedge, it's a bearish direction. So we're having a rising wedge on, a higher high. That means we could look out for potential reversal on this instrument, all things being equal. Let's even flip down to 15 minutes. 15 minutes, well, 30 minutes, all of them are showing the same thing. So what I will advise is this. I believe it may sell. Let me use that word. But then if it's going to sell, you are only looking for opportunities to trade or a sell when price breaks out below this region, below this trend line, both on the weekly and on the 1 hour, below that region. When price breaks out, that is when you can take a sell on gold, and also confirm that your RSI is clearly below 50 at that point. So that's all. I'm bearish on gold, but provided price breaks out into the bearish direction below the weekly trend line and the 1 hour trend line, that's the only time I'll look for an opportunity to sell gold. Okay, I think I've attended to all the questions. For the specific setup I gave for us from my own end this morning, we're bullish on the Euro JPY, we're bullish on the AUD JPY, both of them on 1 hour. So they are intraday setup, which is expected to trigger within the course of today. And we are bearish on the New Zealand card on the 4 hour. That is a swing setup. So if you're a swing trader, that's your trade. Just watch out for it. All right, that will be the end of this analysis session. Don't forget, by 12:30 p.m. we have our afternoon pre-New York session analysis. Do make sure to join us then also. And again, on Wednesday, we're going to be trading CPI live. So make sure you join us. If you missed NFP last Friday, CPI is another opportunity for you to join us to trade live. And don't forget to join our physical training sessions both in Lagos and Abuja. We're having a session in Lagos today. Make sure you join us. And we said it this time around that we have broken our curriculum, our training into 2 times in a month, 2 batches. We started a batch last week, which will complete this week, and we're starting the second batch by next week. So if you have not been at the at the training session at all since last week and you can't be around this week, no problem. Plan to attend next week. So next week we have a second batch where we take the curriculum from the beginning and end it by the last week of the month. 2 training batches in a month. Don't miss it. It's now compressed, but the same quality, if a better quality at a much more shorter time, so that you can learn as fast as you can and start trading. And if all this still looks completely new to you, you don't know how to navigate around it, it's not a problem. We got it covered. Make sure you connect to our copy trading solution. Copy trading is just what you can start. You can start making money from today if you're connected to copy trading. All it involves is that your account is connected to a solution that works. I can recommend one for you. If you need it, reach out to me. Some of you have been reaching out. So if you're there, you're still on the fence. Don't be on the fence. People are making money every single day. So reach out to me. I can get you connected to a copy trading system that is recommended on our platform, and is being proven to be consistent with results. All right, that'll be the end of my session this morning. Take care, have a great day, and a great week ahead. Bye bye.
Thank you, sir.
You're welcome. You're welcome, sir. Mr. Building, good morning.